the new project that you recently co-founded, which is Harbor.
Yeah, so PayPal had to get money transfer licenses in every state in order to be compliant. Harbor, I guess the high-level lesson that I would tell everyone is just, first of all, you have to comply with all these various regulations. And if you do and you get that right, it actually is a business opportunity, because once you're on the other side of, instituting all of that compliance, it creates a moat. And the flip side of it is, and I don't know why entrepreneurs I feel like they typically just ignore this stuff or kick the can down the road, and it's actually precisely the wrong way of going about it. If you look at probably the most successful company in the crypto space right now, is Coinbase, because they really, and I think the reason is because they got all the compliance stuff right around the fiat on-ramps to crypto. They've been historically the most compliant company in the space. So if you get it right, it's really a business opportunity, and that's what we're doing with Harbor, is making ICOs and security tokens comply with securities regulation.
Got it. It's obviously kind of interesting, because when you think about decentralized cryptocurrencies, it doesn't at times jive with regulation, right? The fundamental nature of Ethereum is that it's permissionless, and there are ways to put permissions in smart contracts, but some in the crypto community would argue that might be kind of antithetical to kind of decentralization, right? So how do you think about that related to Harbor? And maybe for those that aren't familiar with Harbor, you could talk a little bit about exactly kind of what you're doing with the R token standard that you guys have established.
Yeah, so Harbor is a platform for the compliant issuance of security tokens. A security token is just, the token is a digital representation of an ownership interest. That ownership interest is a security. And so there's a bunch of compliance that has to be layered on top of a token in order to make that work. To kind of go back to the beginning, the Nakamoto white paper was for digital cash, and the original design was for Bitcoin to be, basically an anonymous or pseudo-anonymous bearer instrument. If you had the Bitcoin or the token, then you were the owner, and there was no central authority to kind of appeal to. The problem when you start talking about security tokens is that that sort of anonymous bearer instrument idea, it's a feature of digital cash. It's a bug when it comes to security tokens, because you have to, there's just so many KYC rules around securities in the US and other countries. So in the 1980s, the US outlawed bearer bonds. In 2001, with the Patriot Act, the US outlawed bearer shares. So the idea of securities as just anonymous bearer instruments is illegal here in the US and about 30 other countries. So if you are going to use tokens as securities, the first thing you have to do is solve that problem.
Got it. And so how do you think about utility tokens versus securities tokens? And I think one question would be, where do you see kind of the early use cases for Harbor, right? Because I think on one hand, people are excited about tokenizing real estate and traditional securities, which we have a panel coming up after this about that. But on the other hand, I think there is gray area on even kind of crypto native projects and whether some of those are securities. So I'm curious how you think about that, and particularly where do you see the early kind of demand coming for something like Harbor?
Yeah, so I think we are, so at Harbor at least, we're focused right now, I think, on getting to this, is getting to tokenization of traditional assets. So we are very interested in tokenizing real estate or interest in REITs, for example. I think tokenization of fine art is another really interesting asset class, and I think there's other ones. There's a whole separate debate about whether utility tokens are securities, and we don't really take a position on that. I mean, we didn't develop Harbor to impose compliance on utility tokens. I think the people involved in those are going to have to decide what level of risk they're comfortable in taking. I mean, I think we're not really operating in a gray area. We're operating in an area where we know these things are securities and have to be regulated that way.
Got it. What about for things like decentralized exchange, right? Where, again, it's still very early in decentralized exchange, and we'll talk later about it, but we're starting to see some meaningful volume on several relayers on top of 0x and things like this. And for the relayers, I think there is also some kind of gray area on what the KYC is and things like that. And do you see Harbor as a potential compliance layer? What about for things like decentralized exchange, right? Where, again, it's still very early in decentralized exchange, and we'll talk later about it, but we're starting to see some meaningful volume on several relayers on top of 0x and things like this. And for the relayers, I think there is also some kind of gray area on what the KYC is and things like that. And do you see Harbor as a potential compliance layer that that things like relayers on top of 0x could use?
Yeah, so I'm a big fan of 0x and what they're doing. And I think they recently announced a feature where they can add permissioning on top of liquidity pools. Because when you're in a world of trading securities, you have to know who your counterparty is. You have to KYC them. Mm-hmm. Again, very different than if you're just dealing with anonymous bearer instruments. But I think the way that Harbor is approaching this is we're actually trying to bake compliance into the token itself. So, I mean, the way it works, this is published in our paper on, the R token or regulated token standard. The R token, it's an ERC20, it's just layered on top of the ERC20 standard. So we're talking about a standard here. It's a type of token, not a token itself. And it contains about 300 lines of additional code to check a whitelist before it trades. And if the counterparty is on the whitelist, they've been verified and approved, the trade goes through. And if they're not, it throws off an error message and the token simply won't transfer. And so we've baked that into the token itself. And what that gets you is it guarantees compliance no matter where or who the token is you're seeking to trade it with.